You.
Yeah, thank you. So yeah, I'm Tom. So one of the BDMs here, although we call it business development advisor, just to be a little bit different, I think. But for as far as you all know, BDMs. So there's three of us. It's not a massive team. We sort of, I would say, if you look at the full list of building societies, we're probably about slap bang in the middle, I think. But we've got three BDMs, and then we got a broker support team. So for your like new inquiries or you're at ARP stage looking to apply, it's our team that you want to be coming to for those. And then when it's mid case, that's more your underwriting department. So the positive is they're literally a few desks away from me. So when you come to our team, it's we're always happy to discuss stuff with them, and I'd say that's one of the advantages of being a bit of a smaller organisation. So we've got our inbox that you can come to, the phones. We do have a live chat, which we sort of ebb in and out of at the minute, but it'll tell you if that's available on the website. But our phone answering percentage is very good. And obviously, if you go on our website, there's details for all the BDMs as well. So you'd come to us. We do have quite a few areas that we lend across. I'm going to go through the later life and RIO stuff today. We do a lot of expat lending as well, and more standard residential stuff. But our big two are the expats and the later life borrowers. Um, so I'll cover most on these today. Like I say, just with the Marsden, as I'd mentioned, then it's a bit more of a personal touch as you get with a lot of the building societies. So we will try and sort of push the bits of grey criteria for you if something is not quite in there and we can push it. The one I'd say the big area, it's a really not for us. I would say the adverse stuff. We do have bits in criteria that we can be flexible with, but things outside of policy with adverse, I would say is the areas we're not as competitive with. But I think this that I'm going to go through today, I think we've got a really good proposition. So be interesting to know what you think after it. So with the range that you will see probably on sourcing, the reason why I've put it, so we call these top two, they're usually bunched into the same product range. So lending into retirement and later life, and then RIO as a separate product range. So I'll go through the similarities and the differences between them for you. I'm going to come back to the lending into retirement one because it can confuse it a bit. So I'll start with the later life. So essentially, what your later life is, so it's borrowers. They've got to be 55 to be eligible, but that is just one borrower with this range. So if you had one at 60, one at 40, they would be eligible. The maximum we go to on this is up to age 90. So from 55 up to 90, and that's the absolute max. So there is an end term on these. The way it's sort of stipulated, I generally say, is through the income. So you might have applicants who are still working. If they need that earned income on the application, we would take them to age 75. So if they need the earned income, it's 75. If we're looking at, because we do get it, the retired income, so that would be state pensions, private pensions, see a lot of SIPs, so that's SIPs investments, and we see a lot of rental income. All those sources are what we class as retired income. That's where we can really look to maximise the term up to 90. So if a case passes on these, an example I'd say is you might have somebody they are still working, they do have a SIP pot and they don't actually draw from it. I would always look at the SIP pot first because that's what's going to help to maximise the term. And if it does pass off the retired part rather than the earned income, that was where we'd look up to age 90. So it's your terms very much stipulated about what income you're using on the application. The maximum they can be at the start of the term is 85 because our minimum term is 5 years. We're very flexible on the repayment types. It's heavily interest only, what I see, but we do offer part and part, and we do offer repayment as well. But that's it's over 90% seems to be interest only on this range. It's very popular. One of the differences to the RIO, which I'll cover why it is, we use all the income together on the later life. So if you've got two applicants, we're not looking at surviving status, anything like that. We're putting all the income together and assess it as you would just a normal standard residential case. The minimum income, the minimum loan, sorry, is 30. Our maximum's 2.5. Anything over 750, you don't have to provide anything different really. It's approved at a higher level. So sometimes it's more just an SLA thing. In that, if we say initial assessments 4 days, sometimes it can just be they take an extra day or two just to get it signed off. It's nothing different in terms of documentation. So put a bit of an example on. I might have ruined my example anyway, but just to kind of bring it to life, so you'll be able to go back to these if you want to look at the slides after. But this would be quite a common thing, I would say, for us. So you've got a fully retired applicant, they've got a SIP pot, state pension, and a final salary pension. So if you see us mention final salary, it's essentially just one where they've got a fixed amount each year, and that's what we're using. So retirement flat is what they're looking to purchase, which we do accept them. So that was something I touched on last week in one of our USPs actually, because it doesn't seem to be massively popular. So it tends to be a complex where you have to be a certain age to live there. Over 55, you sometimes see over 60. We can accept them. What I would say is the main variation I've seen with those type of properties is like your exit fees. So any in that category, I would just let us know the sort of fees that are associated with it. So on this particular one, they've got a deposit of 350 or equity of 350. No sell-on fees, 175 years on the lease. So our minimum's 85 on lease that you need remaining on application. Is somebody they don't currently draw from the SIP. So what we do, and this is across the board, so any stocks and shares, ISAs, SIPs, anything that is like a pot that they've invested in, we take 5% of that. So even if they're not drawing from it, we take 5%. If they're drawing 3% from it, we take 5%. Where we could restrict it is if you've got somebody drawing 10. So we would still look at doing the application with you, but we would potentially limit the term. So if somebody's drawing 10%, it's over what we'd usually do, but we could still look at doing 10 years for them. That's if it's reliant on this SIP income. You know, if we can get it passing off other income and the SIP's not needed, we wouldn't limit a term, but that's just something that's handy to know. Anything under 5% they draw in, same across the board, and we're just looking at the last 30 days statement to make sure that we can guarantee they've got that. So one of the other things we'd look at with this one, like I said, it's passing off that income, the minimum equity. So 350, more than enough. We have, is it on my next slide? It is. So we have a sliding scale on minimum equity. It's very popular in the repayment vehicle for this range. So because there's a max term, they do need a repayment vehicle. This is the most popular one. Now, I know these codes off by heart now, but this is how how it looks in our lending policy. But essentially, you got Northwest, West Midlands, the North, Yorkshire, East Midlands, Southeast, Southwest. The Southeast is really popular. It is one of our highest ones, but we range from, as you can see, about 92,000 up to London at 315. If you met those on the equity, we don't need anything else for you. So you don't need to provide us anything. If they were under, you've got a few things we would look at with you. So they can look at part and part. So say they're 20,000, 30,000 short, you can put that on repayment because at the end of the term, they're going to be at the equity that we've set out. And we would accept comparables in a 5-mile radius. So if you think we are above what they can buy for, you can send us comparables and underwriting can sign off if it's below. So there's other acceptable repayment vehicles we do. I would say this is the most popular one. We wouldn't use pension pots because generally, we're using it as income. So it's probably not a popular one. If you did want to look at using a SIP, we can look at those as long as we're not using it as income. But again, anything you want to sort of suggest in terms of a repayment vehicle, that's what I'd get in touch with us on. So that's a quick bit on it. This is just a quick example on how the sort of part and part would work, but I'm sure you're all aware with that. So as an example, we use Wales, as my colleague Charlotte, she's from Wales, so she taught me into using them. But 133 we'd require for them. Initially, at the start of the term, they only had 100,000 equity. So they'd look to add another 33 onto the repayment strategy. By the end of it, they'd have 167 rather than the 200, and that would be fine for us. So there's a few options if they don't quite meet the equity on this range. The RIO, so this will probably help bring to life more where somebody would sit with later life, where somebody would sit with RIO, because we do get a lot of inquiries. I'll have had ARPs. You get a lot of playing for RIO. It doesn't always fit, but we would always look at later life as well. The difference is there's no specific term with your RIO. So 90 is sort of our max for applying, and we do have a table on the sort of term we put on it. That's mainly just for the system. There isn't essentially a max term, because what the clients are saying is we're going to stay in this property forever. We don't need to look at a repayment strategy with you. So we're not looking for a repayment vehicle from them. No minimum equity requirement. So for those with lower equity amounts, if they really can't find a repayment vehicle, this is probably where you'd look more to RIO. The reason, or not the reason, sorry, so because of that, I would say, so because of staying in it forever, the cases where you've got two applicants, what we're going to look for is, can they afford it individually? So this is your main difference from your later life. So the way we would do it on these, it's all retired income that we're looking at, but we would look at what an applicant is earning currently, so the pension income they're getting now, and then you would add to that any income that would transfer from a spouse. So you'll see it a lot with private pensions. They might get a 50% contribution, they might get 75 or 100. SIPs and things like that tend to be 100 because it does just work in marriage a bit like a savings balance most of the time, unless they've stipulated differently. So what they get currently and anything from the spouse. And on your affordability tests, even with two applicants, you're making sure to put it as one, because that's how we're stressing it for the ONS figures that run in the calculator. So if you're ever unsure with that, obviously give us a shout. We've got a lovely Excel spreadsheet for affordability. I'm sure you'll all be glad to know. So if anyone ever needs a quick 5 or 10 minutes just to explain a few bits, let me know, and I'll happily explain it, because it looks more complicated sometimes than what it is. So that's your big thing really with the RIOs. I would say it's individually. The LTV is a little bit less, so 65% we go to on RIO rather than your 70% on the other range. Multiple income sources again, but no earned income. So they can be working, and we have had this, but you can't be using the income on RIO. So they might be coming to the end of the working life, and you've got somebody, they're already getting a private pension, they're already getting a SIP. That's fine to still do on RIO. We're just not going to be including any of the earned income. That's purely for the later lifestyle, is that one. Again, minimum loan 30, maximum loan 2.5. One thing I would say, I don't think I've included it with this one, but I'll cover some other capital raising bits. One thing we wouldn't generally look at with RIO is debt consolidation. Later life we will do it. Generally, debt consolidation isn't for RIO. We have referred a few where somebody doesn't have another option, so we will try to help if we can. But if they would be eligible for later life, generally an underwriter would prefer them on that range. But I'd say if they're not passing on later life and RIO is looking good, other than they want to do debt consolidation, we will take a look for you. So that's probably an example of we will try and push the boundaries in our team of getting cases through for you. So a little example, just to try and bring it to life with this one. So a client aged 85 wants to stay in the property she's got, but does need some renovations. This has been quite a popular one actually, sort of amending the home to make it more accessible. Currently getting state pension, teacher's pension, and wanting to raise 150. So we do that. So if they currently got zero balance, it's unencumbered, we'll capital raise on those. That's fine. It's not an issue for us. So on this one, like I say, it's pretty comfortable in terms of the income she's got. So we would do, as a standard, 4.5 times income as your income multiple. If it's a like-for-like remortgage, we will go to 5 on those. But yeah, this is quite a common example. Capital raising from a zero balance on a RIO, and a lot of the time, I would say as well, there's other state pension and other state benefits. So it's quite a popular query. I would say I'd get as well is like things like PIP, carers allowance. Those are quite common in terms of questions as well. Payments that are indefinite, so like your PIP that's indefinite and they've been in receipt for at least a couple of years, same with carers allowance, we will look to take them. Other ones that are more sort of situational dependent, I would let us know the context, because we'll have some that are graded green, which means we can use them as long as they're indefinite. Some are a bit more of a amber on our traffic light system where it's potential for it, but we would want to know the context surrounding it. As underwriting, want to make sure we're not putting anybody in a situation where they're not going to be able to afford it if that payment stops. So I'm going to let me just check if is there any before. I'm just going to cover this lending into retirement before a few other bits. It's sort of like a little bit of middle ground on criteria. Let me just check the chat. Is there any questions anyone wants to put in the chat at the moment before I go on to this last one on either of them? I'll keep an eye on it. But yeah, so I'll keep an eye on it. I'll go through this lending into retirement and where this might come in. So what I would say is with these cases, the best thing to do, just give us the scenario, like any income they're currently getting, and whether it's plausible if they really do want to stay in the property till the end, or if there's a bit of flexibility, and we will look across both ranges. So the most important thing, just painting us the picture of what income they're getting, and we can look at everything. The lending into retirement sort, you wouldn't need to know specifically off the bat. This is more something we can fall back into. So it's very similar to the later life. It's generally comes in where people are looking to do bits of repayment on one of the applications, where they're starting off on earned income. So they're usually between 55 and 70. They're starting off on earned income. They want to go past age 75, so we're trying to push them towards 80. So we're essentially looking at it in two halves. So you're saying we're starting off on earned income, but by the time they've finished by the end of the term, they're going to finish working. So there might be between 5 and 10 years of the term where we're going to be switching towards pension income. So this is where we'd be more looking at the projection at that point and saying, we know they're not getting it now, but at the point, say at age 70, what are they going to get then? Now, if it passed on all that pension income anyway, that's where it would fall into later life. We'd be looking to 90. But these are usually applications where it's not quite passing on the starting balance on pension, but they're going to be paying some of the balance down. So by the time they get there at age 70, they're potentially going to then afford it on the pension income. So it's a little bit more complicated. It's one of them that you might not start off looking specifically for this, but it's something we would look at with you. So it's more just an example of something that we have in place behind the two, I would say. So I've included an example that might, this does come up quite a bit. So it's actually somebody with this one, they've lived outside of the UK and moved back. So applicants continuing to be paid in euros whilst living in the UK. So you might get applicants every now and then. They've worked abroad, they're back in the UK, and the pensions are in a foreign currency. So with this particular example, I've put still employed, and then they're moving on to a pension later. So this is the sort of situation we would put in this range where they want to go as long as possible, but there is going to be a switch of income throughout the period. So we do a conversion. Different currencies get a different haircut with us. 10% for euros and dollars. That's all acceptable with us. So the main difference is if you do have clients like this where they're getting foreign income, the product range is an expat residential, but it's all assessed under lending into retirement or later life. So we can still go to age 90, go to age 80 or 75. The product range is always an expat residential, but that's something that's been really popular with us. A lot of people working abroad for like oil companies, that sort of thing, and the pensions that's calculated in euros. So that's something that's accepted with us. We do have 20 foreign currencies that we'll accept. So we've got a list on our expat range, and with this one within the minimum equity as well. So there's a lot of examples. That's a very quick tour across the areas. Like I said, there's a lot of similarities between the later life and the RIO, and then a few subtle differences on those. Like I would say, we've got one other thing. I know I touched briefly on the affordability calculator. Anything you might need with us, I would say our download section on the website is really good for this. So we've got all the criteria on there, but anything you may need for sort of helping you submit. So your affordability calculators, ARP documents, they're all in a download section. So I can send through the helpful links after. I would say your affordability calculator is probably your main one. You might need to give us a shout for, with it being a lovely Excel document. But once you've done a few, these ones they're quite straightforward. I would hope. So I would just say the main thing to take from it really is get a picture of your income, got the equity, what their actual plans are. Like I said, they might be initially just looking to go to 75, but sometimes if the conversation's there, they may look to go further. So we've had plenty like that where they kind of think that's as far as they can get to 75. They're not thinking past it, but we've had somewhere we've then looked at the pension picture and the SIPs, and we've actually said, well, no, we'll take them to 90, and they don't need to think about it ending when they're 75. So we do get a lot of quirky stuff really across these two. So I'd just fire us the situations over, and we'll look to explain how we'd look at them. Put my details on. Like I said, we have got another 2 BDMs as well, and we've got our main inbox. So feel free to use whoever you wish within the team, but we'll always try and come back to you as soon as possible on these inquiries. So I was having a look at the chat. I don't think we've got any in there now. Is there anything? Because I appreciate that's a very quick tour across the 2 subjects. Is there any questions anyone wants to put in the chat for certain situations you might have had recently with cases that I can answer for you? Or if you wanted to come off the microphone, I'm happy to answer any that way as well. Maybe not. Is there anything from you, Mohan, you'd want to ask, or do you want me to, or anything you
No,
can think
thank you.
question-wise they'd want to know? No?
No, thank you. Thank you very much. It's a great presentation, and we'll share that with the rest of the team. Yeah, appreciate that.
Yeah.
Obviously, you've done
No.
a fantastic presentation. That's why nobody's asking you any questions.
They sometimes come after, it's strange how you'll do things and then
Oh, there's one.
a case will come to somebody after.
Oh, I think there's one in the chat for you now.
Yeah, and affordability. So yeah, there's a few other bits actually I can link to this one. So yeah, across both, the standard income multiple currently is 4.5 times their income, and that's whether it's a purchase or a capital raising remortgage for 4.5. If it's a like for like remortgage, we'll do 5 times the income. What I would say on the RIO, you don't need them to meet those individually. So still with the RIO, the income multiple, that side of it, you put them both together. It's just the monthly calculations is where they need to pass individually on those. I'd also say on affordabilities, we do stress it differently for interest only and repayment. So if we are doing interest only, it's stressed at a lower amount than what the repayment would be. I think that is a lot more common now. I just know somebody mentioned it on the call last week that I think there were still some that they perhaps stress it just at the same regardless, but we would in our calculator, it'd give you a lower mortgage payment for interest only, as it should. The debt consolidation query. So yeah, on the later life, it's quite common for us to do debt consolidation. Our standard limit is 30,000, but yeah, we do debt consolidation for credit cards, loans. Currently, we do keep them in the calculator. So say they've got 10,000 of credit card debt that they want to repay, we would put that into the calculator as we would even if they were keeping it. The reason being, I think our sort of the point we've taken is if for any reason they don't pay that off, because we don't pay these companies direct now, the client gets the money for them. If they don't pay it off, we're putting them in a situation where they would still be able to afford it. So we kind of sort of go in worst case scenario if the debt's not repaid. We would on those, so something that's linked to that question you've asked, Brian, is somebody's done home improvements but put it on credit cards. If they can, evidence that to us, we can recategorize it. So I had one last week where the total cap raising, I think it was 50, and initially they'd said debt con for 50, but actually it was I think over the 30 was for home improvements, and they just put it on credit. So we actually recategorized that because it'd been within the last 6 months, and they had evidence of showing that it was for home improvements. So yeah, we'll attempt to do things like that where we can. We are very much some sort of evidence for capital raising is one thing I'd say as well. So we've put a few examples on our document checklist. So they're really handy on our download section for what we want from you with an application. We've only put a few examples on, but we are pretty flexible on capital raising as long as it's not tax bills, gambling, that sort of stuff. Some commercial will, again, I'd send as a context, depends in what form. I wouldn't say we'd be the best at commercial stuff, but some things we can take a view on. But yeah, I would say capital raising, relatively flexible, and it's just some form of income. Debt consolidation's easy because you get statements. Onwards purchases, probably more with other ranges rather than expats, I would say, is common. But things like that, school fees, gifting to family, all stuff like that is acceptable as well with us. But yeah, like I say, if there's no other questions, like I say, I am obviously you've got the recording. You'll send the slides through. You've got my details as well. So honestly, if anything comes up with anybody, you've got cases that you think whether they're looking at equity release, you want to see if they've got options before. Just fire us some inquiries across. and we can sort it from there. And yes, I think our marketing, they were going to be sorting the CPD certificates for us, so I'll get onto them for making sure we can get something sorted for you on them. So if you will you be sending a list more of attendees, or do you want me to sort that after?
Yeah, if everyone can put their email address in, if you want a CPD certificate, into the chat, and then Tom, you can perhaps pick it up from the chat.
Yeah, and that will be fine. And if I need to double check any, I can let you know.
You can let me know.
And just make
yeah.
sure. But yeah, if you want to do that, then we'll keep the recording on while everyone does them.
Yeah.
Yeah, I can always take a shot of the attendees, can't I? And then if there anyone that did not quite seem to put in the chat, you can always double check with them if they were needing that.
Yeah, that's fine.
But yeah, hopefully a few options with you, because like I said, the rates we've got at the minute, they've been doing really well. So it kind of just continues to tick over, does the later life and the RIO.
What sort of rates are you offering at the moment?
So it's
like a 2-year fix or something.
Well, yeah. Do you know the discount have been really popular?
Oh, okay. What rate is that?
So the current one we're on 4.79 for 2 years is across both. So both ranges have got a discount 4.79. So there's no booking fee. So booking fee, others might call it product fee up front. There is an arrangement fee, which is that's the one with us. You cannot add to the loan as long as you stay within the loan to value and the affordability. But yeah, those have been really popular. Fixed a little bit higher, so we've got a mix, but sort of 5.39, 5.49 for 2 years. 5 years similar, 5.39, 5.49. But no, the discount on these, on the later life, the RIO, and the expat stuff as well. The last 2 months been really popular. Whereas last year it was quite rare to see somebody doing discount. It was heavily fixed on most. So yeah, I've been kept very busy across both. So it's a very, very popular range. Are these two lies?
Okay.
It's probably our most popular inquiry. So we'll do less with expats, but the expat one, they generally the loan amounts are generally of bigger volume. But in terms of what we get more cases of is across these two. So yeah, they kept very busy across both of them.
Yeah.
And yeah, we do standard residential, but it's more, I would say there's something a little bit different with properties. So something we've been getting with those, so we do properties with annexes. So 1 or 2 annexes on the land. We do up to 30 acres on land as well, as long as there's no commercial. Yeah. So stuff that maybe a high street they won't want to take on, that then it'll filter down to us and some of the other building societies. So really good, like not just us. I'd recommend it with a lot of the other building societies as well. There's a lot of quirky bits of criteria out there that'll the case will appear at some point. So the thing you want is you don't want to be ringing 15 of them. It's good if you've just got a list, got a top 3. That's well used for that. So we know we're not going to win every time, but hopefully some stuff I've said today, it's puts us in the line, and just give us a shout for if you got any you think would fit with us, and I'll happily go over.
Great stuff. Thanks, Tom. Really appreciate that. And
no problem at all. Thank you for inviting me. And
pleasure.
Have a good rest of your day. And
you too.
Give us a shout if there's anything. Thank you very much.
Yeah, we'll do. Thanks. Cheers. Bye-bye. Bye.